Hello, this is John Piper with the Thursday video, and it's Thursday the 20th of December. Starting with Bitcoin this morning. It's really doing us proud at the moment. Just been listening to a pundit, one of the leading Bitcoin pundits, saying we can't see a V-shaped reversal, which looks like exactly what we've got, for what I can see. It's fairly small, fairly short term at the moment. But in Tuesday's video I did send out a big call suggesting it was time to get in, which is looking quite a good call at the moment. Again, very short term. Wave count, I think this is a 1, 2, then a 1, 2, 3, 4, and now a 5 of 3 in progress. So there's more upside is still inclined. The third of a third, which would be this wave here, is behind us, but we seem to be accelerating, which perhaps isn't so surprising. I mean, there's a lot of buyers, a lot of people want to get into this space, waiting for the low. It could just keep going, I guess. It'd be nice to get a correction just to add to positions, really. But I'm quite well positioned already, so it's not too essential. So to finish this off, we might just see a 4 and a 5, perhaps, although we've got no sign of a correction yet. Let me just make that a bit clearer. So what I'm saying is this is a 1, 2. This is all of 3 up to there, and then we get once there's a high, and we've got a slight spike above 4, 1. So possibly that's in ABC, maybe retesting the 4th wave here, and then a final 5th wave rally to complete the first leg up, and then a correction. Obviously the correction is going to be critical. It needs to be a correction, and not some kind of impulsive sell-off, which takes out the lows. But right now it's looking pretty good, as I said on Tuesday, it's time to get in if you don't want to miss out on this particular move. I mean, certainly you can wait for the corrections, etc. But that's not a problem. But I would certainly suggest putting some cash into this, or if you're already positioned, then more would not be a bad thing. But obviously that comes down to your personal circumstances and your own decisions on asset allocation. Asset allocation is a fairly essential part of the process, and it's something that many people don't actually do. I think it's important to have a plan of how to allocate your assets to make the most of the possibilities. Earlier in the year I mentioned that I sold all my equities, non-gold related equities, which is also another good call this year, I think. It looks to me, the way the equity markets are going, that next year will truly be very unpleasant for those markets. Right, turning to the Dow, we had the peak back in October. We had 5 waves down here, discussed that. We have a fairly regular ABC there, which is wave 2, and then we have a 1, 2, and 1, a 2. Looks like we're in a 3 now. It looks like this could just accelerate downwards over the new year, and well, it could be a very sharp decline. So I was just short positions. Difficult market to trade. I mean, the snapbacks, the volatility is very high, so I had to make a decision on how to trade that. 66.33 doesn't work too well on the Dow, much better on the DAX, but it seems to me we're going to certainly the chart pattern suggests this decline is going to be with us for a bit longer, well, certainly quite a lot longer, and I think January is going to be pretty devastating, looking at this, with possibly no respite into the end of December. And of course, you have expiry tomorrow. Things tend to hot up after expiry, which isn't too pleasant a prospect. All right, the DAX saw the peak in January, so it's been going down all year in effect. We have got 5 waves down to that's 1, 2, 3, 4, 5. That could be a 1 wave, irregular ABC 2 wave, and then we have a 1, regular 2 again, and then a 1 of 3, 2 of 3, and 1, 2, 3. So again, you've got the same kind of pattern really. A 3rd wave decline here looks not such a clear case as on the Dow, but still a valid case for increased sell-offs, possibly after expiry and into January and next year. So again, it's a case of looking to go short, but again, you've got high volatility. But the 6633 system is quite a good way of attacking this because you're taking small positions, small bites, which build up over time. And that's something that all subscribers are entitled to. You should all have seen a copy, in fact. If you haven't seen a copy, then let me know. Yeah, that's what I'll be using and have been using. But in an accelerated move down, it could work rather well, I think. FTSE has probably the most confused pattern we've seen. Peaked in August, so we had a full range of peaks over the year. A, B, C, B. I have this extended sell-off coming. 1, 2, 3, maybe 1 of 3 to there. I mean, that could be a 4, I suppose. This could be some kind of 1, 2. Doesn't really work actually as a count. Looks like we need more downside, really. But let's have a look at the shorter term here. Right, it looks like we've got 5 waves down there. ABC correction, obviously. 1, 2, 3, 4, 5. So we've got a false break here, 5 waves down. I'm suggesting a bit of a bounce. Maybe an ABC is going to come in on FTSE. But again, it will be feeble unless they can take out 6, 9, 20 thereabouts. So a move above that would be a positive for FTSE, but a failure would suggest another sell-off. Alright, gold continues to do well. We had the wave 2 down to there. That's 1 of 3. 2 of 3. We've got 1, 2, 1, 2, 3, 4, 5. So this could be a 5th wave, so we might well fall back from the current move. That would be 5 waves up, probably one of 3 in fact, with a 2 or 3 now due. So it's still looking good, as long as we maintain this pattern of impulsive upside and corrective downside. That will still look like a solid buy at the moment. Right, that's all for today. I'm sorry about the lack of a written report. I was planning one today, but again, just too much to talk about really. Too many patterns that need to be discussed, which obviously can't be done in a written report. Anyway, have a great day. Have a very good best of Christmas and the New Year. And next will be the weekend report, which will probably be the last official report for this year. But I may need to do a number of reports, I suspect, if these patterns continue to unravel as they seem to be doing so. So I imagine I'll be a bit more active than I planned to be. Anyway, bye for now.